Today we're getting a little bit of a Bitcoin relief bounce. We're at 63,554 and some of the altcoin bubbles are green. I'm worried that this relief bounce is actually going to wreck a lot of investors, and I'm going to show you exactly why on the show today. I mean, if you do look at last week, and I want to show you what last week actually looked like, it was actually a momentous week for the Bitcoin market. Why? If you look at the line over here, we touched the 200 week moving average, which is a key level in the Bitcoin bear market. Let me actually show you that line over here. So here's that line. You can see we actually touched that key level over here, which is the 200 week moving average. We also did put in a lower low, and that's why a lot of people are calling they're calling this the end of the bull market, and they're calling this bounce like the lows that we've been at. And there is a possibility of that, but I think that there's more probability that we're going to go down. And if you start trading this, or if you start buying this bounce as the bottom, then I think you may actually get wrecked. And that's what I want to talk about in the show today. Everyone's looking at this relief bounce. Is this a relief bounce? Is this the end of the pain? Let me know what you think in the comments. Let's get the show on the road, guys. YouTube playing games that are stalling our stream. Anyway, we're back and we're here and we're bringing you crypto love and crypto wisdom. We're going to talk about this relief bounce. I'm also going to talk about what happened on the NASDAQ and the little wobbles that we're getting on the AI bubble. So I think it's going to be a cool Monday show, big Monday show. Did you guys see the Kospi this week? Did you see the Korean stock market this morning? Down 8% at some point. Everyone thought like, wow, Black Monday. We're going to talk about this Black Monday thing as well. On Friday, we left here and everyone was thinking that it could have been a Black Monday, and here we are on Monday, and the Monday is actually not so black. So if you look at the NASDAQ, actually it's a green Monday. We are up 2% on the NASDAQ. That's after on Friday we had the NASDAQ down. We had the NASDAQ down 4.5%. That NASDAQ moving down on Friday was what they called I have it here for you. It was called I must find a few. It's called a 3.3 sigma event, which is the equivalent of 1 in 2,300 trading days on the NASDAQ. So Friday was absolutely brutal on the NASDAQ. We'll talk about why Friday was absolutely so brutal. But more importantly, let's actually talk about what happened to Bitcoin. If you're new to the channel and you're not already subscribed to the channel, do me a favor, subscribe to the channel. It really helps us. The more subscribers we have, the bigger guests we can bring you, etc. Also, if you haven't already liked this video, I see there's like 300 people here, and there are 40 likes. So just smash the like button. I'm gonna have some water while YouTube rebuffers our stream. Anyway, let's get into. I feel like I've got something. Let's get into the meat and potatoes of today's show, and that is this bounce that we're currently having on Bitcoin. At the end, or at the low on Friday, we actually got to just under 60,000. And that 60,000, not only did it break the key 60,000 level that we were speaking about, but if you draw a line directly from that 60,000 level over here, or 59,000, you can see that we actually put in a lower low. And the significance of actually putting in, here you can actually see it here. The significance of actually putting in a lower low is that generally when you bottom, or when you get to the bottom of any kind of bear market, what you do is you look for one sign, and that is what you actually come down and sweep the lows. Now you see like we sweep the lows there. We were there and we sweep the lows here. You can also see it like, I mean, you can see it in all of these patterns, but ultimately when you're looking for a bottom, ultimately you want to come down and sweep the lows. And technically, theoretically, you can say, well, you know, Bitcoin did actually sweep the low, but I'm not convinced that that's enough to sweep the lows. Yes, on the charts that is a lower low, and now we are bouncing, and you can see the bounce. You can actually see the bounce on those coins as well. You can also see that we tapped the 200 week moving average. Now the reason why that 200 week moving average is such a significant level, if you look at bear markets previous to the 2022 market, you can see that the 200 week moving average actually served as a level which Bitcoin generally didn't go under. We touched under it when we went to COVID. This is the COVID correction, right? And then only in the last bear market did we actually start really going under the 200 week moving average, in the last bear market, which is the fractal that we are very much starting to follow right now. What you can see is that we touched the 200-day moving average. I'll actually show you. It's a beautiful chart. This. So what you look for here, let me just actually refresh that chart. It'll make it a lot easier for us. Let me refresh that chart, and you can all actually have a look at it. So the reason why that's such a beautiful chart is because if you look at the 200-day moving average, you can see that in the last bear market, which was here, we tapped it, then we broke down below the bear flag, and then we went all the way down. And you can see that that fractal is is playing out exactly the same. When you go onto the weekly, you can see that in bear markets, we usually tap the 200-week moving average, except for the last bear market where we had gone through the 200-week moving average over there, and we went down another 33 or 34% before FTX collapsed, and that was the end of the bear market. So right now, as it stands, we've tapped the 200-week moving average. We've broken down below the bear flag. We've put in the lower low. And then the question is whether this is a relief bounce or whether this is the beginning of the next part of the bull market. And I'm going to show you the answers in a few seconds. I do just want to recap what happened on Friday on the NASDAQ, because that was quite brutal for the NASDAQ. That is the red candle that we got on Friday on the NASDAQ. So I don't know if you guys were trading this. This came out on crypto at the same time while the whole Zcash debacle was going on. And we got to a point where the NASDAQ went down, I think it was 4.5%. I think if you go from top to bottom, we went down 4.5%. Why did the NASDAQ go down like that? Well, it's a couple of things that happened for the NASDAQ. The first thing is, believe it or not, we got a better jobs report. In other words, the market is worried because the economy is actually better than they expected. Can you believe it? Because the economy is better than they expected, and much better than they expected. They were expecting 85,000 jobs to be added, and 172,000 jobs actually got added. And so the US market is basically worried that now you've got high inflation and you've got high employment. In other words, you've got low unemployment, which means that there's no way that Kevin Walsh can actually reduce interest rates. Now remember, Kevin Walsh comes in, he's in the Fed at the moment. Next week is actually his first FOMC. So on the 17th of June, which is next week, Wednesday, we're here with Kevin Walsh. So it's us and Kevin Walsh live with you, listening to the first FOMC with him. Now, this is the first time where we're going to hear data from Kevin Walsh, or where we're actually going to hear him talking formally. Obviously, no one's expecting a rate cut or a rate hike at his first meeting, but we are going to see the tone. And that is especially relevant since this week there are lots of data points that are coming out. Last week it was the jobs report. This week we got CPI and PPI. Now remember that the last PPI took us up to 6%. Let me try and get you those numbers. I mean, you all remember it because we were here with you, or you were here with us. We were here together. Investing.com. Let's look at that CPI. Let's look at PPI. I think, let's just, okay. Anyway, it was at about 6%. It came out at about 6%. So let's see if the PPI is actually starting to come down. It should theoretically come down a little bit because the oil prices come down a little bit, and that usually will help the PPI go down. But ultimately, Kevin Walsh talks after all of that, and after this report, which actually jarred the NASDAQ. Now, this wasn't the only thing that jarred the NASDAQ. The other thing that jarred the NASDAQ was that Meta basically said that they were going to go out and raise money. They're going to sell shares, and they're going to raise money to fund AI expansion, right? And they're not the first ones to do it. Google also said that they're going to raise money to fund expansion. And the market doesn't like this. The market looked at Meta and Facebook and all these companies as effectively cash cows. And now, instead of these companies being cash cows and giving dividends, these companies are basically saying, look, we're not going to pay dividends. We will hold the we will hold the cash, and we will actually go out and raise more cash for more capital investment in AI. And so that got the market very scared. We can see that because if you look at the VIX, that's the VIX. The VIX is effectively the volatility index. And you can see that on Friday, the volatility index, marks how scared investors actually are in the market. It went up 38%. Let's actually see the fear and greed in the traditional stock markets. Let's quickly just see where they're at, because I think that they're very different from where we are. Let's have a look here. Let's have a look here. Oh, man, that's this one. So the fear and greed is now at 42 in the stock markets. And that's after, you can see before that, a week ago, it was at greed. They now went from greed to fear because they're very worried about the AI bubble coming to a head, right? And this is on a week where two things happened. The first thing that happened on the weekend was we got a little bit of an attack between Israel and Iran. Now, the irony of this attack was, I think that Netanyahu and Trump, they both knew that Netanyahu was gonna attack Lebanon this week, and they kind of played like like Netanyahu is defying Trump. Now, if you know anything, you know that Netanyahu would never defy Trump, right? And so they both obviously knew about it. Israel conducts the attack. Iran responds. Nothing actually happens in the Iran response except a couple of sirens and a couple of missiles that basically do no damage. And then Trump comes out and he says, both sides, Israel and Iran are looking to do an immediate ceasefire. Final negotiations for peace are proceeding subject to ignorance and stupidity getting in its way. The blockade will remain in place, etc., etc. The irony is, I picked this up. I'm going to translate it for you because it's in Hebrew. I'm going to translate it for you. So this is Netanyahu, and he says,
לראש ממשלה בישראל חייבת להיות יכולת אחת.
He says, for any Israeli prime minister, he needs to have one ability if you want to be an Israeli prime minister.
אחת. ואם אין לו אותה, הוא לא יכול להיות פה.
And if he doesn't have it, then he can't be here. In other words, they're saying, you got to have one trait. And if you don't have that one trait, you can't be the prime minister of Israel. And listen to what the trait is.
הוא צריך להיות מסוגל להגיד מילה אחת לנשיא ארצות הברית.
He says you must be able to say one word to the president of the United States. And that word is no.
והמילה היא לא.
No.
לא.
I mean, you all know that he is a puppet for Trump and he would do nothing. And so so Trump and Netanyahu are playing like they're not aligned in this. Obviously they're aligned in it. So that's what happened on the weekend whilst the markets were closed. And so everybody thought that on Monday we would have a Black Monday. Like on the weekend, there were Black Monday headlines, etc., etc. And this morning, when the futures opened, I don't know if you guys are watching this. I was watching it. The Kospi crashed like 8%. The Kospi is the South Korean exchange, stock exchange, and it has become a proxy for AI because there's two companies in that, Samsung and one other company, which actually drive that entire stock market. And so this has become a proxy for AI. When they think that AI is going to do well, this market does well. And when they think that AI is not going to do well, this market crashes. And today it crashed 8%. Now, that's scary, but it's not that scary when you zoom out and you basically say, okay, well, where's this thing come from? And then you go like December, and then you go, wow, hold on a second. Actually, it's still up 80% since December. And if you go from top to bottom, it's 112%. So long story short, everybody thought we were going to get a Black Monday. Even the Kospi thought we were going to get a Black Monday. The Nikkei, which is a Japanese stock exchange, also thought we were going to get a Black Monday. And we didn't get a Black Monday. In fact, we woke up and the NASDAQ's up 1.7%. The reason why it was very scary this week is because we're also having the SpaceX IPO this week, right? So we've got the SpaceX IPO, which is coming on the 11th. The 11th it's Thursday, right? It is Thursday. Yeah, 11th is Thursday. So Thursday we got the SpaceX IPO. The reason why everybody was scared is because what you can see is that Elon Musk is offering 555 million shares at $135 per share. So he is effectively raising 70 something billion dollars, right? $trillion. He's raising 70 something billion dollars. And that there are concerns that will drain liquidity out of the market, right? There are also concerns that SpaceX may be added to indices pretty quickly after the listing, which is a change in the rules because historically you couldn't do that. But now the laws are apparently changed or changing. The reason why I'm being so vague about it is because no one actually knows exactly what the laws are here. Whether or not you can actually add it to an index. But the minute this goes into the index, fund managers are going to need to rebalance. So when they need to rebalance, they're going to need to sell things like Nvidia, Microsoft, Amazon, and all the other stocks to include something in this. By the way, if you want to get an allocation in the SpaceX IPO, and you are signed up to Bybit, you can actually go to their SpaceX IPO Express, and this is where you can actually subscribe. You can subscribe for an amount in the SpaceX IPO, which is crazy. I've left a link here. I think if you can get in the IPO, because I think you'll do well if you can get the IPO. I think you can do well in the IPO. Here we go. There's IPO here. You can just go click here, sign up to Bybit, and then just go and claim the bonus, and then go to the IPO section. And then you can actually trade the SpaceX IPO. If you don't want to trade it there, you can actually trade it on the perpetuals exchanges, which I'll show you in a second. But if you want to buy some pre-IPO SpaceX shares, you can buy some pre-IPO SpaceX shares. There's Bybit's actually offering it. But a lot of people were worried that the SpaceX IPO would actually drain the market, and we'll actually see on Thursday what actually happens. So let's actually see on Thursday. So big week. big data this week. As I said, inflation and PPI coming out this week. Next week, 17th, we're here. We're bringing you the first FOMC with Kevin Walsh. It's going to be us and Kevin Walsh live on the first FOMC. So I think that's also going to be a big week. Let's talk about Bitcoin, should we? Because we are still a crypto show. But before we do, let's just see who's here and who's not. Charles is here. Joanne is here. Who else is here? Do you think the researchers are watching? I don't think they are. I don't see the researchers watching. Yeah. Let's go. Let's talk about Bitcoin. So when it comes to Bitcoin, as I mentioned to you, the move was quite a good move, or quite a big move. It was a move that we had been anticipating to break down from the bear flag. We did say there's going to be another leg down. I did say to you, I do think the next leg down takes us to between 45 and 55. And I think that's basically where we're going to land up. So yes, we put in that lower low. There's the higher low, and there is the lower low just below it over here. Yes, we tapped the 200-day moving average. Yes. We also, that's not the only two levels that we basically hit. As Ben Cowan says, he says, Bitcoin has now entered the third stage and final stage of the bear market. This is because the guys who mocked the bears in stage 1 and 2 are now admitting that price can go lower. They were a bull in a bear market, and they will likely turn into a fully bearish in a bull market. So what he's saying is that we're getting to the last part of the bear market. At some point soon, not soon, well, at some point the bear market will turn and will become a bull market. The people that were late to recognize that we're in a bear market may also be late to recognize that we're in a bull market. But we're not at the end of the bull market, of the bear market yet. And I want to show you this chart over here. So Ben also tweeted this, and he said, I love the cadence of the chart. Bitcoin percentage of supply in profit or loss. So that's what this chart says. And if you expand the chart, you can basically see. Let me actually see if I can get it for you here. So that's the percentage of supply in profit and the percentage of supply in loss. The percentage of supply in loss is the red, and in profit is the orange. Obviously, as the price goes down, the percentage of supply in profit goes down as the percentage of supply in loss goes up. Now, what you can also see if you look at this chart is that generally when these charts cross, they spend a little bit of time actually cross. So you can see like in this case, they spend time like crossed from, let me just show you, be a little bit more accurate here, from about the 22nd of November, and we turned sometime in December. So about a month later, actually no, we actually bottomed somewhere over there. So about 2 months later, right? So generally it takes these charts cross, the percentage of supply in profit and the percentage of supply in loss actually cross. And when they do, after a period of more Bitcoin being in profit, in loss than in profit, that's when the market actually turns. So based on this, the end of the bear market should happen 2 to 3 months from now, right? So June, July, August. Ben's talking about September, October for the end of the bear market. So we're starting to enter the last phase of the bear market. If you want to understand more about what Ben was talking about, I did actually interview him on Saturday. You can actually see that video. There's a link for you. I leave links for you guys everywhere. I basically do all the work for you. Here we go. Here's the video over here where he talks about where Bitcoin finally bottoms. You can go and have a look at it. It's literally, it is here. Crypto Insider. There we go. Ben Cowan. This is where Bitcoin finally bottoms. So the percentage of supply and crossover has bottomed. I don't think that we bottom until we touch the realized price. If you look at the previous bear markets, we've always hit the realized price and maybe even gone under it. In this bear market, we haven't hit the realized price. Today, the realized price is at about 54,000. I would imagine that at a minimum, we touch the realized price. And I would imagine that at a minimum, there's probably 2 to 3 months left of this bear market. So even though sentiment is really bad, and like if you look at sentiment, we are at extreme fear. I don't remember in the last bear market seeing sentiment this bad. But it actually got me thinking about something, right? And the thing that I was thinking about is, which bear market was scarier? This bear market or the last bear market? Let me know in the comments, and I'll show you a little analysis that we did around which bear market is actually scarier, this one or the last one. So let's do the poll. Let me know also in the chat, what do you think? Has this market been scarier, or has the last one been scarier? I actually did an analysis. The analysis that I did looks something like this. I won't show you the whole analysis now, but what it looks, I took the fear and greed every single day from the top of the market to where we are now, and I tallied up how much fear we've had in the market, and I'll show you the results of that towards the end of the show. Let's talk about Saylor. Saylor. Because Saylor was trolling on the weekend. You know that last week he sold 32 Bitcoin, and that sent the market into like an absolute frenzy. So on the weekend, whilst everyone was thinking Saylor's made a grave mistake, he's going to run out of money, Saylor starts trolling. Like when I say trolling, like this is Saylor trolling. He says a good time to add more dots. You're talking about adding dots, but last week you sold 32 Bitcoin and you sent the entire market into an absolute tiz. And then to troll even more, what he said was he published like 32. I'm like, oh God, here we go. And then Feng Li, who's the CEO, says our corporate strategy is to increase net Bitcoin and Bitcoin price per share over time. Rumors otherwise are just rumors. And this is in response to rumors over the weekend that Strategy had sold a whole lot of Bitcoin to pay their dividend obligations. So he was quite clearly trolling, and you can kind of see it because today he says Strategy acquired 1,550 Bitcoin for 101 million to increase our reserves. So all that FUD, or everyone thinking that they were selling because they couldn't fund their dividend obligations. Obviously, they were selling for tax reasons or for some other reason because they actually ended up being net buyers. My biggest question is, where did you get the money to buy Bitcoin from? Because you would have, that's $100 million. Where did you get $100 million from, right? So, and he also says here, we have also increased our USD reserve by 100 million to 1 billion. So now they've got $1 billion in reserve. So you can see that they're starting to build up the reserve to pay the dividend. Now, I know that in the interim, you can see STRC hasn't yet pegged. We are now in the 8th, which means in a week, if this thing hasn't pegged, it's not pegging this month. I don't think it's pegging this month. I've already said that. It's not going to peg this month. Anyway, just let's move on from that. So I looked at this tweet on the weekend. This tweet, Michael Saylor always says that he uses AI for all his big business decisions. So this person asked Claude, he said, you're advising Michael Saylor on his Bitcoin accumulation strategy. Keep in mind his cash situation. Keep in mind his dividend obligations. Keep in mind his preference shares. And give specific recommendations for this week and the next 12 months. And he puts out all these metrics. MicroStrategy is at 120. Strategy has an MNAV of 1.24. You own 843,706 Bitcoin worth $51 billion. You have 6. He gives them all the inputs effectively, right? And then he runs this prompt. Now, I did exactly the same thing. I went to ChatGPT. Let me just help us here. And let me make this a bit bigger. And I took that same prompt. And I said, if you were advising Michael Saylor, what would you do right now? And basically, he said what ChatGPT said is exactly what Grok said. And exactly what Claude said. And they all say exactly the same thing, which is the exact opposite of what Michael Saylor is actually doing. What Michael Saylor is doing is he's trying to increase the Bitcoin per share that he actually buys, right? They're buying more Bitcoin. What ChatGPT, what Grok, and what all the other AIs are saying, number one, it says preserve cash for preference dividends. You've got $1.7 billion of annual preferred obligations, right? Build a liquidity reserve 12 to 18 months for the preferred payment. For the next 3 months, raise the MNAV. The ways to do that, increase demand for preferred. Obviously, you can't do that. Blah, blah. He says for the next 12 months, mandatory cash. Keep enough cash to pay pref dividends and operation costs. Opportunistic Bitcoin purchases only. And it basically said here, the most important metric should focus on total BTC owned. Basically, they said, manage the balance sheet. My recommendation in one sentence, for the next 6 to 12 months, strategy should prioritize liquidity and restoring MNAV above 1.7 and making sure they continue to pay pref dividends and only resume aggressive Bitcoin accumulation when the machine is working perfectly again. Okay? And then I asked ChatGPT, I said, do you think he made a mistake using the cash to redeem the convertibles? Based on the assumptions in your scenario, I would say yes, probably, but only because of where the capital structure is today. The question is, what was the cost of retiring the converts versus the benefit? And basically said that Michael Saylor made a mistake retiring the converts because the converts were 0% interest, not due for a lot of years. It was dream financing. And he basically went and swapped the ability to pay pref dividends to redeem those things, which ChatGPT couldn't understand. Anyway, Saylor's brushing us all off. And effectively, he's saying, look, I'm trolling you. I bought and I landed up buying a lot more. That's basically what Saylor's done. All right, before we talk about the fear in the market, before we talk about whether this market or the last market were more fearful, which one was more fearful, I do want to show you something that's happening, two things that are happening today. The first thing is Dylan. You all know Dylan. Dylan's from Chart Hackers. He is one of the master traders, and he's running a challenge to teach people how to turn $250. If you want to turn $250 into a funded account of $50,000, watch this.
DJ and Dave withdrew $80,000 from his Bitfunded account. This makes him Bitfunded's most profitable trader. And the two of us are running a 3-day challenge on the 9th of June. And we're going to give you all the tools that you need to turn $500 into a $50,000 trading account. I'm Dylan, and I'm going to show you how to become a funded trader. So what is funded trading? Well, essentially, you're going to pay a small fee to pass a trading test. And if you pass that test, you're going to unlock trading capital, and you're going to keep 80% of the profit. Day one, you are going to learn how to identify very simple reversal zones, and you are also going to be attending a live workshop with myself and DJ and Dave. Day two, you're going to apply these strategies yourself. And then on day three, we are going to hunt these trade setups live together, and if their conditions are right, we are going to execute in real time with you guys. Now, we only have 50 spots available, and that means the first 50 that sign up and purchase the 50K Bitfunded challenge automatically get a second 50K challenge for free. Comment hackers.
Okay, so long story short, Dylan's got this reversal strategy that he uses, which is incredibly effective in this kind of market. He's running a challenge where he teaches people how to turn a $500 account into a $50,000 account, right? To do that, you need to sign up over here. Now remember, only the first 50 people get the special. The others get a second special. Go and it's actually turned $249 into a $50,000 trading account. Go and click this link and actually sign up, because I really think that it's like 3 short days. You're basically working for 3 short days, and you could get a $50,000 funded account where you basically keep the 80 or 90% of the profits. That's the first thing that I want to show you. Now let's go on to the fear, and I'll show you the last thing later, because the last thing I'm very excited about. So I asked you guys which bear market has been more fearful. And Hardest, what did people say? Is this one been more fearful or the other one?
It's very close, like 47 for this one, 53 for the last one.
So 47% think that this bear market has been scarier, and 53 think the last one was scarier. Last one we had FTX, we had Luna, we had 3 Arrows. This one we've just had a bull market in stocks, right? So what did I do? I actually ran an analysis. And the analysis was, I took the fear and greed reading every single day from the 10th of October, right? And what I did was, I took the reading and then I subtracted it from 100, just to make it that the scarier it was, the higher the number. And I tallied up the total fear that we've had in this bear market from the 10th of October. And if you tally up the total fear in the 241 days since the 10th of October, the total fear is 18,471. For the same 241 days from the top of 2022, we had the total fear was 17,607. So if you said that this bear market actually felt scarier, you're right. We spent more time in fear this bear market than we spent in the last bear market. So, but we're going to keep it running every day until the end of the bear market, right? Which, by the way, in the last bear market took us to 26,000, which means that we are about 2/3 of the way through the bear market, just from a pure fear and greed perspective. All right, now lastly, before we go, this is very cool. It's limited to 1,000 people. I think you guys should join us. So we are hosting a trading competition, but it's a very different kind of trading competition. So in this trading competition, you don't put down any money. You basically come to a poker style interface. Like if you guys play online poker, you come to a poker style interface where you can join a table, and you can pick any table, you can join any table, and you can trade with 1,000 other people around a poker table. Now we're going to host a competition on Wednesday, starting at 9 a.m. EST. The competition is for real prizes. You win $5,000 if you win, and there's a whole lot of other prizes, 5,000, 2,000, 1,000. It's free. You don't pay any money. The money you're trading with is also paper money, so it's not real money, but the prizes are real. And we're going to all be there. Sheldon, Ryan, Dylan, Kyle, Chento, we're all going to be playing around the table. There's only 1,000 places, 1,000 places here. If you want to sign up, again, it's free. There's no money changes hands. You don't have to pay. You're not even trading with real money. It's just a fun trading competition, and they're real prizes. So you register here. You register on this link over here, And then you join the table, because remember, the table only has 1,000 seats. So, and now I've just launched it. There's 27 seats that have already been taken. So what I need you guys to do is to go and sign up so that you actually secure your seats, because Chento is going to sign up people, Dylan's going to sign up people, Carl's going to sign up people. We're all going to be there. We're going to be trading for 3 or 4 hours, 4 hours. So we're going to be trading from 9 to 1 EST. And then, and then that's going to be, the winners are going to take the money. I think it's going to be amazing. The rules, 2 rules to follow. Okay, I don't know what the rules are. We can check them. We can check out the rules when they actually happen. But remember, go and sign up, because it's only going to be 1,000 places, and all the other hosts are going to start filling it up. It's free. You don't pay. You can just win. You don't know. We're not playing with real money. If you lose, nothing happens. There's no implications. It's just you lose paper money. But it's going to be fun, because we're going to go and see who the best traders out there in 4 hours are. All right, friends. I will see you guys again tomorrow. Until then, trade well, my friends.